I don't think we know yet whether there's a bubble, but we're certainly headed to one if the volume of IPOs that is slated actually happens this year. Certainly good for the early ones, good for Lyft to get out, good for Levi's to get out. Pinterest will benefit from being at the early part of the curve. But with the exception of Levi's, the others really are not a high quality from a financial health perspective yet. Because the financials were just released for Pinterest, we were able to rate it in the last few minutes. And we rate them on a 100-point scale for our financial health rating at a 48. 48 is medium risk, but it is really looking at what the short-term risk is for the company, whereas the core health for Pinterest is rated as an 18, which means that over the next 2 to 3 years, it is absolutely in the heart of the zone of where companies have failed over the last 20 years. So without question, and Lyft is almost the same. Lyft is almost the same, 41 from a financial health perspective, and it's an 18 from a core health perspective.
So this core health perspective, which for both of them is a lot lower than the financial health rating, what exactly, that's the forward-looking rating. How could you be wrong there? How could they then be successful?
So what the core health is really measuring is how efficiently a company is run and how successfully they're able to generate returns or be on a path to generate returns based on its equity size, its asset size, the kind of revenues that it generates. Whereas the financial health rating takes that core health score and it modifies it for resilience indicators. What kind of liquidity does it have? What kind of leverage does it have? So if you take a company like Lyft, which is relatively weak from a long-term perspective at an 18, it doesn't have much to default on debt-wise, and it's going to have a lot more cash, and although it's got half the cash it had a year ago, it's still got a decent amount. So the chances of its failing in the next year are relatively small. The thing to watch for is how are the companies using the new money from an IPO to improve the operational efficiency of the company and be on a path to profitability.